So what investments and asset classes should you invest in? There are three broad asset classes that most investments are derived from in some format. So there's cash and bonds, and could put in there fixed interest. There's property, and there's shares. If you look at the risk and return of those particular assets, then if you're investing in cash, generally it's the lowest risk and generally the lowest return. Now, over the past couple of years, it's probably provided a better, well, not the immediate last financial year, but the couple prior to that, cash probably provided a better return than the other asset classes, but that's where there's really negative markets. But generally, there's over the long term, there's lower risk, but there's also lower returns as well. If you step up to bonds, there's a little bit more risk involved, and therefore potentially higher returns. Property is a combination of the two, with some growth and income coming from it. Now, property, when we're referring to property here, it's not just residential property that we're talking about. So it's commercial property, retail, industrial, office, or commercial type properties. So that is that whole asset class that we're talking about there. It is of higher risk than cash and bonds, and has a with a higher risk comes a high level of return. And then the most risky are shares, so investing in companies, and they're the highest risk asset class, and also over the longer term have traditionally provided the longer term better returns as well. So the point to take away from this particular slide is that risk and return are related. The more risk you take, the more return you should be getting from it as well. So the idea is, from an investment perspective, try and get the highest amount of return with the lowest risk. In the global financial crisis, the problem was that they were wrapping up all these bad investments into a product that were classified as AAA rated, so really highly rated. So what they were saying is that there were really risky assets, but they weren't providing that great a level of return. And that's where things came unstuck. In terms of asset classes, what determines the majority of returns? And if you... often we have a discussion about trying to time the market, and a couple of people have called me recently saying, I want to get my funds out of the market. I want to move it to cash because I heard that it's going, things are going to be shaky, and at some point in the future, I might move back into the investment option I was in before. Now, that can have some benefits, but if you look at the overall source of returns, 94% of return comes from the asset class that you're actually invested in. Something like 2% comes from market timing, so getting in and out of the market, and 4% from stock selection, so picking the right stocks. So by far, the thing that gives you the biggest indication of your return is the asset class. So focus on that. You could actually, at the highest level, your asset class is the equity versus bond in your portfolio. So with Christian Super, for example, ethical cash is all bonds. That's the highest level asset class, whereas ethical shares is all shares. There's no bonds in there at all. And then the other three portfolios are somewhere in between. So just a message that focusing too much on these areas, getting in and out of the market and picking the right stocks, potentially isn't the best focus. If you focus mainly on the asset class.